share the screen and we'll be good to go. All right, so first session back from holidays. I hope that everyone had a very good vacation, very good time with family, friends. Happy New Year to everyone as well. So 2025 was a good year. We had good results. We grew a lot as well. That's the important to always grow, always improve. And as long as I'm executing better than the last year, I did my job, right? That's the right mindset. So, um, do you have your kind of analysis of 2025? Did you go through your trades? Have you identified what you did that you can do better? And then articulate that into new rules or new mindset, new framework for 2026. Um, that is very important to make. Just sit down, write that on a sheet, and that will guide you to um, kind of go through the right area of your trading and improve successfully. All right, so uh, sorry, I'm speaking with my nose beginning to be a bit sick this morning, but we'll be good to go. Hey friends, good morning everyone. All right, so let's go into the market analysis. So for those that are new in the community, welcome. We are doing these session every morning, and the goal is basically just to review the market, review the portfolio, form a good game plan, and explain a bit higher level what is my game plan and what I plan to do for the day based on what I see. And again, this is not predictions. This is only observations, and obviously we adapt as the day goes according to the action that we have. All right, so this is not a set in stone plan. It evolves, and when it evolves, then obviously I explain it in my journal or directly through my trade, through the action that you can understand what I'm doing. All right, so first thing first, I think it's important to note that yeah, the market went up following the April's correction. And what we're seeing right now is basically a giant VCP, right? So market peaked on October 29th. And do I have something? Yeah, this one. All right, and basically we are in sideways consolidation for 45 trading days, so more than 2 months. And what we're having is that giant VCP, right? So we're building lower highs and higher lows as well. So clearly, with we're at a defining moment, and the market, which side it will resume from here will likely give the market direction for the next few weeks. At least that's the expectation. So obviously, I'm positioned for the move higher just based on the setups, on how the conditions are oversold as well. But obviously, if we break lower from here, then I will change my approach. I will reduce exposure. I will manage my risk, and that's how I usually trade. I like to get good size, good exposure within the contraction, within the pullback, and then if it doesn't work, my risk is known, and I just adjust my exposure, I reduce my risk, and then I wait for the market next window of opportunity. That's how I trade. So sometimes you will see me having good size exposure, um, and you don't really know why because the market really didn't go yet. But my portfolio is gaining traction because I trade the liquid leaders, and it's very often that the market is still contracting and you get traction in your names. And when I get traction, I use progressive exposure and I increase my exposure to a certain level of open risk that I'm comfortable. Right now, it's 2.5% of my equity. That's the new positions that are the risk, that are not the risk, sorry, um, that I stand to lose. All right. So I know my risk, I'm comfortable with it, and I'm ready to take that hit if the market doesn't confirm the setup. All right. That's important to know, and that's a mindset. And don't ask me why I'm having that exposure. Uh, that's why. I get that question so often. But Alex, the market is not trending yet. Why do you have so much exposure? That's the reason. All right. All right. So that's about QQQ, but you know me, I track QQQE, so equal weight NASDAQ 100, and we're basically seeing the same picture. So we had that low being made. We had the 21 DMA structure reclaim in December. Then we went sideways and we're building higher lows. And for me, that's kind of the setup that I'm playing as a 21 DMA structure reclaim and backtest. And tightening up on the right side. We have a higher low made on Friday, and yesterday was actually pretty constructive despite the fact that we didn't close above the 21 DMA structure itself, but we closed above the 21 EMA itself. We closed above Friday's high, so we confirmed a daily reversal attempt, and all that while having some traction in my portfolio. It's not perfect. It's far from perfect. The market is still very mixed. It's still a bit weird. I still think that it's because of the end of the year and the start of the year. There's certainly some fuckery going around. I want to see that uh, toning down, right? At some point, we want to see that those fades going away. We want to see clean action and broader participation, right? And yet we don't see that in the McClellan, and that's a bit what we feel in the last 2 days as well. There's good strength in specific groups, but there's also strength being faded, and that will need to stop for the market to be healthy. But it doesn't mean that we cannot make money or build our exposure while this happens. Just need to be more patient, trust the structure, have good entries, and just let it work and do uh, whatever it wants as long as it remains above a rising 21 DMA structure, right? All right, so that's about price for QQQE. Now, what I really liked yesterday was the credit spreads action. Uh, so credit spreads going down is good. It means risk on is being priced in. Risk assets are being bought. Sorry. And yeah, so we are rallying into a declining 21 DMA structure. Same thing happened at the end of the year. And I shared that on X, but I was watching kind of that range being either broke on the upside or to the downside, right? So that was kind of my signal to be a bit more aggressive, to kind of anticipate the market breaking out higher rather than lower. Uh, and yesterday we had that breakdown on the credit spread. So for me, that's a really good sign. That's what I wanted to see, and that's why I pushed a bit on margin yesterday. VIX giving the same picture basically. So we had that big volatility, contraction. We had that first rally into declining 21 DMA structure. And at the end of the year, same thing as the credit spreads, we had that rally into the declining 21 DMA structure, into that base structure as well. So we're retesting the October and December lows that we broke just before Christmas. And now we're rallying into that structure, and we have double confirmation. So the 21 day structure, the base structure as well. So obviously we want that to do the same thing as the credit spreads. We want to see the VIX break lower, reject those structure, and not spike above. So if we start to see VIX spike above the 21 day structure, if we start to see credit spreads start to break and spike above the 21 day structure, and if we see QQQE to break lower from here, fail the daily reversal, close to a new low as well, break that higher low structure, then we're getting into that scenario where the market is not just basing to go higher, but basing as a distribution. And then that will push me into defense, reduce my exposure, control my risk, and just wait for the market to reset up. So see how I have my exposure, I have the scenario that I'm playing, but I always keep in the back of my head what can go wrong and what will I do if that happens, and more importantly, what do I need to see specifically for things to go wrong, right? I always like to see the market as noisy, right? It's normal that the market is trading around the 21 day mid structure. It's normal to see those fades above a rising 21 day mid structure. But what is actually not normal? I want to see what is not normal. And for me, if like I said, VIX credit spreads spike above their structure, if QQQE and QQQ breaking down below their 21 day mid structure and breaking their higher low structure, that's the red flag. That for me just goes from, okay, the market is chopping around, it's still basing, to, okay, the market is potentially rolling over and I have to defend my capital for having the most of my beans for the next market opportunity, right? That's the way I think. Always having the worst case scenario, uh, but a bit higher level, right? My not so good scenario is not the break of yesterday's low. That's still noise. For me, the not good scenario is breaking that multi-day to week structure of high lows. So at high level, that scenario is defined, and I'm ready to take action if that happens. All right, that's very important. Uh, and on the good news side, we have the 21 DMA structure reclaim on Bitcoin to start the year. That's very good to see. I remember in December, we're always talking in those PMS sessions that, yeah, the market is looking good. We have traction, but we don't really have participation of Bitcoin. We're still distributing below a declining 21 day structure. Uh, and we always repeated the same thing. That's kind of not a red flag, but that also probably means that the market is not ready yet. Uh, as usually a very good and strong trend does have those risk on assets participation, right? I I never saw a really strong trend without Bitcoin and crypto participating along those growth stocks, those high speculative names. You need those to trend, to be accumulated, for the market to really confirm that it's breaking out, and that we have good momentum in the market right now. So the good news is we had that breakout over the weekend in Bitcoin. We did reclaim the 21 DMA structure. That's the first step, right? That's only the first confirmation. Let's not yell victory too soon, because we can still fail. We can still reclaim the 21 DMA structure, and the backtest itself fails. That's a possibility. Maybe we're really early, and it will fail. I don't know. But all I know is it was really tight into year end. We have the reclaim. I engage around the 21 EMA, so I have a lot of cushion. It's their risk. I'm in the money. Uh, so now my expectations are we're right into those December highs. Though there is a base structure here. Will we be able to break out right away, or find some resistance and do that back test into a now rising 21 DMA structure? That will be something along normal behavior, right? Once we reclaim the 21 DMA structure, it's normal that we backtest, that we form potentially a higher low. That's all within normal price action, the normal price cycle. So from here, I'm already in observation mode. Do we push? Do we backtest? Uh, do we tighten up? I don't know. That's all possible scenario. I don't have a clue what will happen. But all I know is now the trend is up. And we will assess the health of that new potential trend when it backtests. When sellers will step in, or the buyers will defend, or the buyers will be more aggressive. Will they defend the higher low? Will they defend the rising structure? That's all the clues that we will watch as the trend goes on, evolve, and mature. It's too early to say that we have a confirmed new uptrend. So far, we only have a reclaim. All right. All right, so that's about the market. Now let's look the portfolio. So there's stuff not there risk yet. Um, like I said, I have 2.5% NAIR, so new exposure risk. I'm comfortable with that. I was able to get some nice tight entries with low risk. Uh, I'm able to also reduce my new exposure risk, because some stuff like SNDK is having the structure rising, so I'm reducing my risk each day that the structure is rising. So I'm trading my stop against that structure low, right? So each day that the trend is live and remains, then my stop loss is raised and my risk on that position is lowered. So that's good to see. It's not the risk yet, but the risk is contained. That's one position that I could de-risk today. Let's see if we tag that to our target. AMD, that's the kind of fade that I was talking about earlier. We saw a lot of those fades, but for me, the context is important. Uh, we had the 21 DMA structure reclaim on Friday, and that fade is the backtest. And unless we break down from that now rising structure and we break that higher low structure, then it's all good. It doesn't mean that because we backtest and we fail to shoot higher to the moon within days, that the trend is dead and the trade is dead. All right, so always be patient with your positions. Um, Let them work as long as the structure is valid, as long as the stock remains above a rising structure. It's all good. And I'm not saying it will do the same thing, but look what it did in October. That was the same thing. Long, tight action below the declining 21 DMA structure. Pops out. And then what happened? Sharp backtest within a day. Okay, there was a news pre-release of earnings, all right? But that's the same thing. That's a quick backtest of the 21 DMA structure, and then we resume the trend. So, never expect your stock to go to the moon when you buy it. Being patient and letting the trade work is super important. And that's the type of action that we see in AMD. And the line in descent is super clear. If it breaks down from the 21 DMA structure, then the trade is invalidated. I'm taking it off. My risk was known, it was accepted, and it will just go into the mat. All right, one losing trade. That's all. Google, mega cap leader. It's still building higher lows at the 21 DMA structure. Tight inside day yesterday. And yeah, as long as we remain above the 21 DMA structure, I have a small cushion. I'm ready to let it work. It's not doing anything wrong, so I have to be patient there. Rivian, yeah, positioning into the 21 DMA structure, pullback structure. We have an inside day yesterday. Let's see which side we break. That will likely give some next few days direction. Amazon, new trade from yesterday. So I'm still so I'm trading Amazon, but through the double ETF, but the trade thesis is through Amazon, right? So we have that higher low structure, we have that big base, right, building up. That's what I'm playing, right? There's also a huge AI play. It's not only an online seller. It's way beyond that now. So yeah, we have that high reclaim. We have the 21 DMA structure reclaim as well yesterday. And what I'm playing is that high low structure into that bigger base. We have the 21 DMA structure reclaim. And yeah, Friday was wild. We saw that wild action across the board in mega caps. But yesterday buyers came in, so I'm treating that as the back test, right? We respected the higher low structure. For me, that's the back test because we reclaimed the 21 DMA structure. We reclaimed that recent swing high. And for me, it means that the setup is back in play, right? So no idea if it will work, but I really like the risk reward for the bigger base breakout. Yeah, VRT, not good action this morning. I took that as a bit like AMD setup, so 21 DMA structure, reclaim, and backtest. So far, it's not working on VRT. Not sure. I didn't see any news, so it's a weird price action. Good gap down, no news. Usually, I don't like that, especially when the rest is green. Uh, but yeah, my risk is known. I have my stop loss at the 21 DMA structure. We're right into the gap, so maybe we need to only backtest a bit further. So I will assess that trade at the end of the day, and if it closed below the 21 DMA structure, then I'm gone. I will close that trade. That's no big deal, and you have to accept that not every trade that you place uh, will work, and it's important to understand that fact. Um, yeah, and the rest is just de-risk position, core positions. So I have WDC trying to make a new high. Um, Good action. RDDT trying to make a new high and push off the right side. RCL is a new position from yesterday. It was already de-risked. Uh, but yeah, it failed to close below the daily reversal, close right at the 21 EMA. I would have liked a better close than that, to be honest. But I'm ready to be patient. My risk is now um, zero. So obviously, if I let it slide a bit during the day to take my decision at the end of the day, that's possible that I increase my risk a bit. But that's the bet I'm willing to make, to be patient. So ideally, we reclaim that reversal pivot. We reclaim that 21 DMA structure. Uh, but we're still within normal price action. Again, 21 DMA structure, reclaim, and I'm playing the backtest into a rising structure. So still looking good. Bitcoin, we discussed that, playing that against with EBIT ETF. Rocket Company, I think they're into aerospace, right? They do rocket. Correct me if I'm wrong, guys. Sorry, that's the running gag of the last few days. Yeah, I know, my friend. Sunday's you can't hear. You cannot say after 20 minutes of me streaming that you cannot hear. Oh, just joking. Okay. Sorry, you're breaking up. Sorry, I don't hear. Okay, bye. All right, back to business. Yeah, Sandy, you need another coffee. It's usually me that is failing in Sandeep's trap. So it's good. It's good to see the inverse this morning. Um, all right, so back to business. So Rocket, that's a rate sensitive stock. So I think that's a good, almost an edge. It looks like it's going fine when the other stuff is not doing so good, and not doing good when the other stuff is doing well. So that's a stocks that I like in my portfolio. But yeah, big breakout yesterday of the right side. We were having that contraction in price, tight right side here, and finally the breakout. So uh, that's my core. I'm trailing the 21 DMA structure, so just need to see where it goes, trailing the structure. And finally, core. So yeah, there was some weird big fade in names like CN. What else? Yeah, Light. core, and there was others as well. So let's see how they are absorbed. Uh, they all held their 21 DMA structure yesterday. So yeah, is it kind of the first blow and we'll see a breakdown from here? Or do we kind of consolidate and build the right side and eventually kind of resume that uptrend? We're still building higher lows. So we're still within the trend normal price action. We don't have any red flags. Structure wise, even if we had those break in those big red days yesterday. It could still be kind of early year reshuffling, fuckery, shenanigans, however you want to call it. Um, and yeah, we'll have to see how it resumes. Uh, as for focus lists, I don't have a lot to be honest. I think like stuff like uh, APH, I tag that as playable in weakness, right? So maybe we'll have kind of that high low being created on the right side with that kind of inverse head and shoulders. That gap down is actually what I wanted to see to actually play this name, but not sure it's ready. I would be interested in some kind of oops reversal. Same thing in core. Uh, Interested in oops reversal. Same thing in GEV. Interested in hoops reversal. It's too high here. Same thing with VRT. Maybe we'll have it today. Um, Same thing with NVIDIA. Interested in hoops reversal as we build the right side and the back test into the rising 21 DMA structure. And the two names that I find kind of uh, tighter and more ready without that oops reversal and that red open and that flush into structure is Hewlett Packard, so HPA. So you have that tightness on the right side. You have that daily reversal to play against. You have that Harlow and the rising 21 day structure. So that's a name that is looking more ready. And Rivian as well. So Rivian building the Harlow in the 21 EMA structure as we build that and we mature in that trend. Uh, I took the undercut and rally, so I have a good position, good cost basis, but it's still playable. It's still within buy rate. It's still playable against that daily reversal, or even inside that inside day. Uh, you know me by now. I don't like to buy the breakouts anymore. I like to position myself before that breakout happens. So sometimes it works, sometimes it doesn't. But if it works, then I have a really good cost basis uh, and clear of mind when it does work. And if it's not working, then the risk is minimal. All right, so let's take some. Oh, first thing before we take some chart review requests. So, game plan for me. Yeah, Sandeep is not liking HPA, but I do like it because it's in my scan. But you know what? That's what is beautiful about trading. Sometimes we have diverging views, and it doesn't mean that it doesn't work. It doesn't mean that it will work. And that's the beauty about the market. There are different views, and we can all make money. So, uh, I highly respect Sandeep's view, and yeah, he's right. That's not a clean chart. What I'm playing personally is that base and resumption of the April's trend, but the last few weeks period is very choppy. So he's not wrong. All right. So MP. Yeah. So we have the 21 DMA structure reclaim, but that's too extended right now. All right. So and that's always the same thing. I like to wait for the back test of the rising 21 DMA structure. Does it happen in the next few days, or does it need to run hard and then we'll have a bigger back test later? I don't know, but all I know is my risk reward is not good here, and I need to wait for my spot. FSLR. Yeah, that's a choppy trader as well. Um, yeah, there's a base. There's high lows. Uh, but that's all over the place. Yeah, if you can get it really tight in the 21 day structure, maybe. But look how it's sold. As soon as it gets above the 21 day structure, it's sold. So don't try to buy the reclaim. Uh, Look for a better entry, lower risk. I think that's the way to trade this name. If you like the space, the group, the solar group, uh, just make sure to have a good entry. Uh, Orban, yeah, Sandeep covered it. That's a nice back test. Um, yeah, fighting against the declining 21 day structure, but if it does reclaim, that's your setup. GH, um, yeah, that's a nice chart. Look for that reclaim right here. That would be kind of the 21 day structure reclaim that I'm looking for. So, hey Alex, with your entries, do you ever think about keeping a max entry point in relation to ATR? Yeah, I do. Read the guide book. I do explain that I have a one time ATR limit from the 21 EMA. That's what I'm willing to buy. That's my buy area. I don't want to buy above 1 ATR from the 21 EMA. That's my rule, and that's also what is built in my scan. So the 21 EMA structure pullback scan, there's that 1 ATR from the 21 EMA built in into the scan. So everything that is popping into that scan, I already know that it respects that rule. So Graal, same thing as what did we cover? Uh, MP. That's the same thing as MP. That's the 21 DMA structure reclaim. I like to wait for the back test, right? So we're right into structure. Uh, I don't like to buy there. Yeah, it's still within 1 ETR from the 21 EMA. But I don't like to chase. And look at previous period. It's really rare that you don't get that back test and the stock just goes parabolic like that. Just have realistic expectations. That's not how stocks moves. Uh, and if you still think that it will move like that, that's probably kind of a FOMO problem. I don't mean it in a bad way. Um, and yeah, just understand that it's normal that stocks are backtesting and that provide kind of the best entry in my opinion, best risk reward, higher odds because the stock proves itself. Buyers are defending the rising structure and you just get extra confirmation that odds increased, that the trend is strong, that the buyers supports the pullbacks. That's big information. All right, Rocket Lab. Someone has that a bit higher. I missed it, but it's way gone. It's way too high from the 21 EMA, from the 10-week moving average. Uh, the only entries were this in December, and maybe if you were a ninja, you were able to get Friday on that back test of the 21 EMA structure, but you had to be pretty fast and a bit lucky maybe because even the undercut and rally was too high then. So yeah, not playable in my opinion. If you're in it, then good job. Just raise your stop and that's a leading name for sure. Yeah, QBTS to extend that as well. 1.4 times ETR from the 21 EMA already broke out. So you're a bit buying that kind of day. And yeah, that's not how I trade. We agree more than we disagree. That's the good thing. And as trading, uh, our agreement rate is not 100%, and that's perfect. All right, Alex, versus VRTL. Do you look for a close below 21 EMA low on their own chart or based on? That's a very good question. Um, I tend to base my decision on the underlying, so VRT. Um, and I plan to do the same thing with Amazon and a bit as well. Um, so yeah, that's a bit tricky question, but uh, yeah, I prefer the underlying if I trade kind of a derivative. How do you assess EC risk? Oh yeah, that's super discretionary. That's based essentially where we are in the structure and kind of my comfort zone in terms of position size. So I'm comfortable. So if that's a kind of really high ATR name like SNDK, then I don't like to go too high. So obviously I will cap myself to zero point 0.5 to maybe a bit higher like I did, but I don't want to be kind of above 10% size. If it's a mega cap, then around 20% position size is kind of my sweet spot. So I do use risk base, but if we are really, really low, what is a recent example? Oh, yeah, RCL yesterday. So my entry was kind of right here. All right, so if I take a 0.5 EC risk, what happens? The problem is I will take a 60% position size. And what happens when you buy as close as your stop loss is your win rate is reduced by a lot. So I have way higher chances of being stopped out with a big position size. So I'm not comfortable doing that. My stress will be very high, will not sleep well. What happens if it gaps down? Then my 0.5 risk is thrown out of the window and I take a 2% EC hit. Um, so I like to buy a bit higher just to provide the cushion to work around for the noise, for the position to work itself around and above the 21 day structure. That's kind of my comfort zone. Between for normal ATR name, I like being around 10 to 15% position size. That's kind of my sweet spot. So if I see that like RCL, I can get at a 15% position size for only 0.1% EC risk, then I'm in my comfort zone. And I'm happy to have that decent position size with super, super, super small risk. All right. I prefer that as taking a super big position size and being happy with a big position for a normal EC risk. I hope it's clear. All right, so 9:26 guys, we will wrap this around. Um, so enjoy your day. Let's see where this market goes. Be patient with your position. I think there's some good constructive action going on, but there's also mixed action. So I'm cautiously optimistic. That's the right way to say it. So cautiously optimistic. Um, and yeah, obviously we will have the confirmation from our position, from the market itself, and we'll take this day by day. All right. So take care, everyone. Manage your risk. Stay positive. Stay open-minded. And if you have any other questions, then I will be in the trading pit to take your questions. All right. So have a good day, everyone. Take care. Cheers.